NIO, The Electric Dream, written by Jim Cramer from CNBC. The electric vehicle market is red hot. Investors are pouring money into companies promising to revolutionize transportation. One name on everyone's lips is NIO, the Chinese EV maker. With sleek designs and ambitious plans, NIO has captured the imagination of many. But before you jump on the bandwagon, remember one thing: investing based on hype is a recipe for disaster. Don't get caught up in the hype. Fundamentals matter. It's easy to get swept up in the excitement surrounding EVs. The sleek designs, the promise of a greener future, and the innovative technology can be incredibly alluring. Everyone wants to be part of the next big thing. The buzz around new technologies and groundbreaking companies can create a frenzy of investment activity. But smart investors know better than to make decisions based on emotion. They understand that while excitement can drive short-term gains, it is the fundamentals that sustain long-term growth. Before you buy any stock, especially a high-growth, speculative one like NIO, you need to dig into the fundamentals. This means looking beyond the headlines and understanding the core aspects of the business. That means understanding the company's financials, its competition, and the risks it faces. You need to look at revenue, profit margins, debt levels, and cash flow. Ignoring fundamentals is like buying a car without looking under the hood. You wouldn't buy a car just because it looks good on the outside. You might love the paint job, but that won't matter if the engine is shot. Similarly, a company might have a great story or a charismatic CEO, but if the financials don't add up, it's a risky investment. Take the time to analyze the market trends and how the company fits into the broader industry landscape. Are they a leader in their field, or are they struggling to keep up with competitors? Read up on the latest news and reports about the company. What are analysts saying? Are there any red flags or potential issues that could impact the company's performance? Use financial ratios and metrics to get a clearer picture of the company's health. Ratios like the price-to-earnings, PE ratio, debt-to-equity ratio, and return on equity, ROE, can provide valuable insights. Attend seminars, webinars, and other educational events to deepen your understanding of investing. The more you know, the better equipped you'll be to make informed decisions. Keep detailed notes and records of your research. This will help you track your investment decisions and learn from your successes and mistakes. Diversify your portfolio to spread risk. Don't put all your eggs in one basket. By investing in a variety of assets, you can protect yourself against market volatility. Remember, investing is a long-term game. Patience and discipline are key. Stick to your investment plan and avoid making impulsive decisions based on short-term market movements. By focusing on the fundamentals and making informed decisions, you can increase your chances of achieving long-term financial success. So, don't get caught up in the hype. Do your homework, understand the fundamentals, and invest wisely. Your future self will thank you. NIO's financials, a mixed bag. So, how do NIO's financials stack up? Revenue has been growing rapidly, which is encouraging. However, the company is still losing money. This isn't uncommon for young, growth-oriented businesses, but it's something to watch closely. Cash flow is another important metric. NIO has been burning through cash as it invests heavily in growth. This is sustainable for a while, but eventually, the company needs to start generating positive cash flow. Valuing NIO Tesla is not a fair comparison. NIO is often compared to Tesla, the undisputed leader in the EV space. While there are some similarities, these comparisons are often misleading. Tesla has a much longer track record, a larger market share, and is profitable. NIO, on the other hand, is still in its early stages. Using Tesla's valuation as a benchmark for NIO is like comparing apples to oranges. Both are fruits, but they have very different characteristics. Investors need to consider NIO's unique circumstances when assessing its value. The EV battlefield. Can NIO compete? The EV market is becoming increasingly crowded. NIO faces competition, not only from established automakers like Volkswagen and Toyota, but also from other startups like XPeng and Li Auto. To succeed, NIO needs to differentiate itself. NIO is betting on its premium branding, advanced technology, and its innovative battery swapping system to stand out from the crowd. But will it be enough? Risks galore. Navigating the uncertainties. In the world of investing, uncertainties are a constant companion. Whether you're a seasoned investor or just starting out, Understanding and navigating these uncertainties is crucial for making informed decisions. Investing in any company comes with risks, but this is especially true for companies operating in emerging industries like EVs. The electric vehicle market is still in its nascent stages, and while it holds immense potential, it also comes with a unique set of challenges and uncertainties that investors must be aware of. NIO, one of the prominent players in the EV market, faces a number of potential headwinds, including political risk. Political dynamics can significantly influence the business environment, especially in countries like China, where government policies can change rapidly and have far-reaching impacts. The Chinese government has significant influence over the auto industry. Policies related to subsidies, regulations, and trade can either bolster or hinder the growth of companies like NIO. For instance, changes in government subsidies for electric vehicles can directly affect the affordability and attractiveness of these cars to consumers. Changes in regulations or subsidies could impact NIO's business. Then there's technological risk. The EV market is not just about producing electric cars, it's about staying at the forefront of technological advancements. Battery technology, in particular, is a critical area where continuous innovation is necessary. The EV market is evolving rapidly. Companies need to invest heavily in research and development to keep up with the latest trends and technologies. For NIO, this means not only improving battery efficiency and range, but also exploring new frontiers like autonomous driving and smart vehicle technologies. NIO needs to stay ahead of the curve in terms of battery technology, autonomous driving, and other areas to remain competitive. The competition in the EV market is fierce, with numerous players vying for a share of the pie. Staying ahead means continuously innovating and adapting to new technological advancements, and of course, market risk. The stock market is inherently volatile, and the performance of companies like NIO can be influenced by a myriad of factors, including global economic conditions, investor sentiment, and market trends. A downturn in the global economy can lead to reduced consumer spending, which in turn can affect the demand for electric vehicles. A global economic slowdown could dampen demand for EVs, hurting NIO's sales. Economic factors such as inflation, unemployment rates, and consumer confidence play a significant role in shaping the market dynamics. During economic downturns, consumers may prioritize essential expenditures over purchasing new vehicles, impacting the sales of companies like NIO. Investors need to carefully weigh these risks before investing in NIO. It's essential to conduct thorough research, stay informed about market trends, and consider both the potential rewards and the inherent risks. By understanding the complexities and uncertainties of the EV market, investors can make more informed decisions and navigate the challenges more effectively. Battery swapping game changer or gimmick? This question has been on the minds of many in the electric vehicle (EV) industry. One of NIO's most intriguing features is its battery swapping technology. This innovative approach allows drivers to replace their car's battery in a matter of minutes, rather than waiting for hours to recharge. Instead of waiting hours to recharge, NIO owners can swap out their depleted batteries for fully charged ones in a matter of minutes. This process is facilitated by a highly automated system that ensures efficiency and safety. This could be a game changer for the EV industry, addressing one of the biggest concerns consumers have about electric cars: range anxiety. Range anxiety is the fear that a vehicle has insufficient range to reach its destination, leaving the driver stranded. However, there are also challenges associated with battery swapping. The technology requires a significant investment in infrastructure, including the construction of numerous swapping stations. Building out a network of swapping stations is expensive and complex. Each station must be equipped with advanced robotics and a supply of fully charged batteries, which can be a logistical challenge. It remains to be seen whether this technology will gain widespread adoption. Investors and industry experts are closely watching NIO's progress to determine if battery swapping can become a viable alternative to traditional charging methods. For consumers, the convenience of battery swapping could make electric vehicles more appealing, especially for long-distance travel. Imagine being able to drive across the country without worrying about long charging times. The technology also has the potential to extend the lifespan of batteries. By regularly swapping out batteries, wear and tear can be more evenly distributed, potentially reducing the frequency of battery replacements. Government policies and incentives could play a crucial role in the adoption of battery swapping. Supportive regulations and subsidies could help offset the high costs of building and maintaining swapping stations. As NIO continues to expand its battery swapping network, The company is also exploring partnerships with other automakers. Collaborative efforts could lead to a more standardized and widespread adoption of the technology. Ultimately, whether battery swapping becomes a game changer or remains a niche solution will depend on a variety of factors, including technological advancements, consumer acceptance, and regulatory support. Only time will tell if NIO's battery swapping technology will revolutionize the EV industry, or if it will be seen as just another gimmick. For now, it remains one of the most exciting developments in the world of electric vehicles. The final word: don't gamble, invest smart. NIO is a company with a lot of potential. It's operating in a massive and growing market, and it has a number of things going for it. However, it's also a company facing significant competition and numerous risks. Before you invest in NIO or any other company, do your homework. Don't just follow the hype. Understand the business, analyze the financials, and assess the risks. Only then can you make an informed investment decision. Remember, investing is a marathon, not a sprint. Choose your investments wisely.